Hello, everybody. I'm going to talk about what the financial markets might do in the next few years, what they might do, and where you should think about parking your money and your capital, we should say, to help protect it from things like inflation, systemic risk, things like the 2007-2008 banking crisis, the what was it, 2013 or 2014 Cyprus deposit confiscation, things like that. How can you protect your money, and what might the markets do? All right. I'm not an economist. I don't have a PhD or anything like that. I have studied economics and I've picked up a few things along the way. However, I don't study Keynesian economics, so if you have a PhD in Keynesian economics, you're going to notice that pretty much everything I'm about to say is either wrong or irrelevant within the frame of Keynesian economics. Um, so, but that doesn't really matter because we all know that Keynesian economics is bullshit. Alright, so let's talk a little bit about a few driving market forces so you can understand as a layperson how the market kind of moves and what forces shape it. Maybe once or twice a week I get a message on Facebook from some random person asking me what do I think is going to happen, what are good things to invest in, or where in the crypto space should they put their money, right? There are some things I'm not going to talk about because I don't want to get too complicated. I'm not going to talk about the bond market. I'm not going to talk too much about emerging markets or a few other things. Let's talk about QE and QT. All right. So QE stands for quantitative easing. It's the Orwellian doublespeak for money printing money out of thin air, right? And QT stands for quantitative tightening, which is the opposite, right? Making the money disappear, or not printing as fast as you were once printing it, right? So pretty much all the major central banks in the world did massive QE after the 2008 crisis. Of course, the Fed was leading this charge, printed trillions of dollars out of thin air. Not completely out of thin air. The US dollar is backed by something. It's not totally toilet paper. It is backed by the full faith and credit of the United States government. However, there is a limit to this full faith and credit. You can't just print trillions and trillions and trillions and trillions of dollars. People are eventually going to lose faith and credit. All right, so its backing isn't infinite as the Fed chairs would like to have you believe. So you're printing lots and lots of money out of thin air. So theoretically, all the money in existence is worth less. They're actually stealing your savings. And inflation has consistently happened every year to the tune of between 2% to 8%, depending on which formulas you're using to calculate the inflation. That's a whole other subject. So basically, why haven't prices risen substantially, right? Why haven't they risen by hundreds of percent? Why haven't we gone into hyperinflation? After all, they printed trillions of dollars to bail out the banks and continue to fund the government's massive debt with QE. Why hasn't that happened? Because there's two kinds of inflation, right? There's money supply inflation and there's price inflation or asset inflation, right? So money supply inflation, you're printing tons and tons and tons of money out of thin air, or almost out of thin air. That's called money supply inflation. You're increasing the money supply. Then there's price inflation. That's when you see prices rise as a result of that. Now, every dollar printed in QE doesn't always translate to the equivalent amount of price inflation. Why is that? Because most of the price inflation is not happening in consumer goods, energy, electronics. A lot of it is. You're seeing prices rise significantly every year in those areas, but most of the QE money is going to the banks and they're lending it. Most of the QE money is going into the financial markets, going into the $4 quadrillion or $15 quadrillion derivatives market, or however much that is. It's going into the stock market. That's why the stock market is hitting all-time highs, despite really questionable macro data and financial fundamentals. And the student loan bubble is another big one, right? It's huge. It's gigantic. Where's all this money coming from? Well, the federal government is guaranteeing student loans, so the banks feel comfortable just lending out as much money as they want no matter what. As a result, of course, university and college prices are rising ridiculous amounts because that's how the market works, supply and demand. You're having a ridiculous amount of demand. Supply is basically staying the same. Colleges can increase costs as much as they want because the federal government is guaranteeing that all this money is going to keep coming in. Of course, the Federal Reserve Bank is lending the money to the banks who are then lending this money out to the students. So that's inflating the cost of college. cost of university, and it's inflating this giant credit bubble. It's the same thing with mortgages, subprime lending, predatory lending, and stuff like that. So you see all this money printed out of thin air being dumped into the stock markets around the world, and in numerous other financial betting markets, and of course the housing market. That's why all the bubbles have been reinflated after 2007, 2008. We saw the bubbles burst, and now the housing bubble, and now we have the everything bubble. Everything is just going up massively. All this QE money. So, anyways, that's causing a lot of distortions in the financial markets. And then QT now, of course, the past couple of years, the Federal Reserve Bank in the U.S. has been rolling back its balance sheet, and with the end goal of eliminating the easy money policy. And of course, this is terrible for the markets. Realistically, all the markets should just crash the instant they hear that they're going to do this. But they don't think the Fed is going to really keep doing this. They think the Fed is going to either do it really, really slowly, never actually make a significant impact, never really raise interest rates by a significant amount, or they think the Fed is eventually going to backtrack. At the first sign of a severe market correction, the Fed's just going to throw a whole bunch of QE money into the market. But neither of these scenarios are sustainable. You can't have the stock market keep going up forever on fake printed money. So you have the QE and the QT, which, like I said, is not just in the U.S. Those are just major forces driving money supply inflation, price inflation, and around the world across all the major central banks. And so that brings us to a number of questions. What's going to happen next? What do economists say? We don't really want to listen to what Keynesian economists say, because people like Paul Krugman and retired Fed chairs Janet Yellen and Ben Bernanke, they're all just saying everything's great. Well, occasionally they put out a word of caution. They say, oh, the stock market might be a little bit overvalued. We should watch out. But in general, they're saying everything is fine. The central banks are doing their job. The markets are great. Unemployment data is great. Blah, 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 blah. Right? Don't have anything to worry about. Keep investing your money. Don't worry about inflation, hyperinflation, hyperdeflation, anything like that. So we don't really care what the Keynesian economists have to say, because they've always been wrong. They've never predicted a downturn or a crash or anything like that. The people that have predicted these problems and said that they are problems, and been proven right again and again, are the alternative economists, the Austrian business cycle theorists. Which, whatever you may think about the Austrian business cycle, there are a number of valid things to take from it, and the economists that follow those sorts of ideas. So if you listen to somebody like Peter Schiff or Jim Rickards, or a classic, gold buff, or a gold buff is what we might call them, or a stack people who are big on precious metals and traditional economics, they're constantly predicting that the economy is going to crash. They're always telling you, oh, there's going to be a huge crash. This isn't sustainable. It's all going to go down. And they're right to some extent. But they make these predictions every single year. Most of them have finally stopped making these predictions because they got kind of annoying after a while. And sometimes they were right. But like in 2015, someone messaged me and said, I have $35,000 savings in the bank. I'm worried. I think the economy is going to crash this year. What do I do? And I'm like, well, you shouldn't be thinking about that just because you read that the economy might crash this year. It could crash anytime. You should always have your portfolio in a position so that if the economy did crash, you'd be perfectly safe. Most people don't. They have all their savings in one fiat currency in one bank, or in the stock markets, which again are propped up by QE money, and they don't really think about what would happen. What would happen if the stock market crashed, if the US dollar crashed, hyperinflated? Would your savings be safe? No, you would probably lose it all, unless you thought about that. So you don't really have to think, you don't have to buy into any of these theories that the stock market's going to crash this year or next year. Or maybe it's not even a crash. Maybe there's just going to be a long, slow decline plagued with hyperinflation events among all the emerging market currencies and blah, blah, blah. It doesn't matter. You should always have your portfolio properly diversified. So there are other economists, for example, Martin Armstrong and a few others, who don't think inflation is going to be a problem really soon. They think deflation is going to be a problem. They think the dollar is going to keep going up significantly in the next couple of years. Some of them think for a really long time. Others, Martin Armstrong specifically says that by 2020, 2021, or before 2020 and 2021, the dollar is going to continue rising, partially because emerging markets aren't doing that well, and people are flocking to the dollar as a safe haven, And just because the dollar is always traditionally a safe haven, it's going to be the last to fail. People are just going to crowd into the dollar. It's going to go up. And then things are going to turn around because, of course, there's a lot of complicating factors. But one thing to think about is that the Fed can keep printing money as long as people keep wanting the dollar. The minute demand for the dollar starts going down, it's going to result in hyperinflation. Different economists say different things. Some of them have very specific forecasts that say, in 2020, 2021, the dollar is going to be really high, and then things are going to turn around. Others say every single year they say, the economy could crash at any minute. Ron Paul tends to be that way. He says, the system is unsustainable. It's bound to crash. We just don't know when. We can't predict when. They're very good at propping the system up. The point here is that you have to be prepared. It doesn't matter. I don't make predictions really regarding these markets, even though people ask me to sometimes, nor do I make predictions regarding the crypto markets. I have made some really good predictions in the past. But honestly, I made those predictions during times when it was really easy to make predictions. Markets were already going up. It was just a matter of me picking which altcoin was going to go up next, and I was really good at doing that. And I made some really good calls. But I don't make predictions during times when it's hard to make predictions, because most people who do that end up being wrong. And honestly, there's no point in doing that. My point is, you should be prepared no matter what happens. Your portfolio and your savings and your capital that you've amassed, your life's work, basically your hard-earned savings, shouldn't be dependent on whether your prediction of what's going to happen next is right or wrong. Sure, you should have money in whatever fiat currency of your country, right? Sure, you should have some U.S. dollars. If you have already invested in the stock market, keep it. Sure, yeah, you don't have to sell all your stocks. If you haven't, don't start. Maybe if you really want to gamble, buy the Dow until it hits 30K and then sell it, but I wouldn't go there. There are a lot of retail investing sites propping up. I'm sure you've had friends send you the referral links in Facebook. You should check out this site, and it's like a trading site, and you dump in some money from your bank account and it lets you buy some shares of companies, and all the millennials are doing that. It's the coolest thing. They buy Amazon and Apple and Tesla and whatever, and it's great and it's fun, and of course the stock market is just going up, so everyone's making a little bit of money, but honestly, I wouldn't do that because institutional investors are dumping stocks and retail investors are crowding in like crazy. And when I say retail investors, I mean you and me. I mean like people who are 25, 30, 40 years old who have money in their bank account and are fooling around online. Those are retail investors. They're crowding into stocks right now, and they're always the worst at timing markets. They always crowd in at the worst times and lose all the money because the institutional investors know when to get out. And they're getting out, and they're also doing massive stock buybacks, and basically millennials are piling in because their friends are sending them messages on Facebook with the links to these sites, and they're like, that's cool, I want to do investing, right? Don't do that. If you're already in the stock market, yeah, keep your stocks, whatever. If you're not, don't bother. It's not worth it, I don't think. You want some fiat currencies. If you already have stocks, keep them. If you don't, it's not worth it in my opinion. Definitely cryptocurrencies. You should be in cryptocurrencies. Bitcoin is probably going to be the best long term. I hate to say it, but it's got the first mover advantage like crazy. Second to Bitcoin, I'm going to say the privacy oriented coins are my favorites. Dash and Monero, the two best I think, and then beyond that we have like Zcash and PivX and a few others to a lesser extent. But one of the most important reasons Bitcoin was made and all these other altcoins were made was because people saw a need for privacy and anonymity, not to fund terrorism or anything like that, though certainly it can be used for that, but because governments have always wanted to crack down on people's economic activity. Look at in Cyprus where they confiscated people's deposits. Look at when MasterCard cuts off donations to WikiLeaks because they're releasing whistleblower information from governments, or when like PayPal cuts off Alex Jones for political reasons, things like that. Anonymous cryptocurrencies can easily protect us from all of that. So every time a black swan happens, like the Cyprus thing, which was one of the contributors to a huge rally in Bitcoin price, anytime something like that happens, things like Dash and Monero are going to go up. People are going to recognize that, and those have always been solid investments. Beyond that, just don't get Ripple. It sucks. Big banks love it. Ethereum is fine. Cardano is fine. Any of the top 10 or 20 are fine, except for Ripple. Maybe avoid Bitcoin Gold. Bitcoin Cash is probably even good to do too. And just get a decent basket of cryptos. If you don't want to think, just get Bitcoin. If you want 2 or 3, get Bitcoin. Ethereum-Monero. Keep it simple. Ask a friend if you need advice on how to do that. I'm not going to get into the details of buying and storing crypto and keeping it safe. And here it's beyond the scope of this video. I don't want to talk forever. Precious metals, you need to get some precious metals. Physical precious metals in your possession. Don't get gold ETFs or silver ETFs or certificates, because those are rehypothecated. It used to be a conspiracy theory that gold and silver markets were manipulated. It used to be a conspiracy theory. It's not anymore. Now it's been proven again and again and again, and we know that rehypothecation is a thing. All right. Companies say that they do it. That's admittedly a fractional reserve system for selling gold and silver. The way the gold and silver markets work is that the price is not just based on physical sales, it's based on certificate sales and electronic certificates. So if people want to manipulate the price of gold and silver and make it go down, all the institutions have to do is rehypothecate, print, and sell ridiculous amounts of gold and silver certificates. And that drives the prices down. So gold and silver have been traditional hedges for thousands of years that have protected people from hyperinflation in their currencies. That's why in the East, in Asia and the Middle East, a lot of countries, a lot of cultures are still really big on gold. When someone gets married, they give the bride huge amounts of gold jewelry. Families usually have a box of gold. That's their savings for when times get rough, because they know that's going to save their savings more than government pieces of paper. In the West, people have forgotten that. Nobody really cares about gold and silver anymore. It's seen as a barbarous relic, but it's held its value through the years. It's a solid investment. Unfortunately, it's not really able to go up right now much because of all the manipulation. But once they're unable to do that anymore, once investors start to see through that, then of course they're going to go up again. Cryptocurrency, of course, can be easily manipulated by whales in the market, but it can't be manipulated right now in the same way that gold and silver can. And that there's physical delivery of Bitcoin and other cryptocurrencies, which is, in other words, being in physical possession of the private key. That gives you access to the coins. It's so easy. So there's not really this electronic certificate crap that's going on in the gold and silver market. So they're unable to depress the price so much. Yeah, they can move the price all around with whales, but they're unable to just make it go down and keep going down like they have in the last few years with gold and silver. So where does that leave us? Fiat currencies, keep some. Stock market, only if you already have it. Cryptocurrencies, definitely get into. Gold and silver, precious metals, you want those. Buy bars and coins. You don't bother with jewelry. Bars and coins from reputed dealers like APMEX, AppMex, and what's that other one? JM Bullion, and a few other websites. They'll order it right to your door. 1 ounce, 1 gram, gold or silver bars. Same thing with and you can pay in Bitcoin on some of those websites as well. And then food producing land in the tropics or subtropics, because if the global economy does crash, we're not going to have this beautiful distribution infrastructure that delivers food to our grocery stores in the suburbs constantly. So large amounts of people are going to find themselves starving, as we've seen in economic collapses and communism and things like that. So you want food producing land in a rural area in the tropics or subtropics. It's a great thing to have. And land is cheap in a lot of developing countries. Like, for example, I'm in Ecuador and I help people buy land here, and it's very cheap. We manage it for them. We can have houses built and fruit trees planted and just have a turnkey situation where if the economy ever did collapse, you could just come down and bam, you'd be all set. And if it doesn't, you have a vacation home. You can come for a month or two out every year, 6 months a year or something like that. So I'm already helping people do that, but of course there are many other options. But you can get land for cheap, $1,000, $2,000, $3,000 US dollars per hectare in some areas. You just have to know what you're doing. You have to find someone who's there, who you trust, so you don't get ripped off. Food producing land in the tropics or subtropics, that's what you need. Social capital, community, friends, family, really need to build up on that. Most people in Western cultures don't have enough of that. Nobody even talks to their neighbors. Nobody talks to their family. Especially people who are into alternative lifestyles like raw veganism and anti-government agorism, things like that, tax evasion, cryptocurrencies, all that kind of thing. Those people usually aren't anything like their families, and it's hard to connect to their families, and they lose a lot of friends, and so you really have to find a group of people that are into the same things, and then you can amass really valuable social capital, which is basically just the connections between people that you know that can help you in the future. And then tools, and other important things. But in terms of financial assets, we're not going to touch into like physical possessions that don't have monetary exchange value, like guns, as much as everyone loves them. Not in the scope of this video. So keep your fiat currency. Keep your stocks if you have them. If you don't have them, don't buy them. Get cryptocurrency, get gold and silver, get food producing land in the tropics and subtropics, load up on social capital, which is a funny way of referring to friendships and community. And then you'll be safe no matter what happens with the economy. You'll be fine, right? If you just have your $50,000 savings in the bank, your $150,000 savings, half of it's in the stock market, a third of it's in the mutual fund, the rest is in a bank, and then maybe you have a house on the side. The house is going to lose most of its value when the housing bubble crashes again. And if the economy crashes and you have a stick frame house in a northern climate with petroleum heating system, it's fuck. No one's going to want that. It's not going to be useful. Basically, you don't want to be loaded up on things that are going to be totally worthless if any segment of the economy fails. Even if you just diversify 10% of what you have into the things that I've mentioned, and that's totally realistic to do, then you'll be all set. You don't have anything to worry about. You don't need to ask me for predictions on what's going to happen. You don't have to watch endless Jim Rickards video where he constantly predicts the economy is going to crash and gold's going to go up and silver's going to go up to $50,000 an ounce or whatever. You don't have to worry about any of that stuff. Just know that you'll be safe and that you'll be prepared. Anyways, that's all. The video's already long enough, so message me if you have any questions. And that'll be all for today.